You know, while Fed officials are not predicting recession, their comments show they're not ruling it out either. Faced with the uncertainty of the impact of Russia's war, which threatens to drive high prices even higher, and the unknown, of course, of how much restraint will be required to control inflation, Fed officials are speaking with far less confidence than normal about the economic outlook. Fed Chair Jay Powell is recounting of previous successful efforts by the Fed to rein in inflation. He says it's been done 3 times before. At his NABE speech, he would only go so far as to say there was, quote, some grounds for optimism that a soft landing could be achieved. And Kansas City Fed President Esther George said yesterday, quote, a soft landing is possible but not guaranteed. She warned of tougher policies if inflation does not come down. And Philly Fed President Patrick Harker telling CNBC, quote, there may be bumps when we get into a period of below-trend growth for a while. He forecast a safe but not necessarily a soft landing. Now, Powell and other Fed officials have said they think the economy is strong enough to withstand rate hikes, along with, of course, the labor market. But for Fed officials, there's a series of unknowns that cloud the outlook of whether they will purposely have to tighten policy so much as to push the economy into recession. Here are some of those unknowns. Is raising the nominal rate enough, or as Larry Summers has suggested, does it have to be the real yield? And that means it would have to go up by, I don't know, to 3 or 4%, according to Summers. Balance sheet reduction, what will that do versus rate hikes in terms of restraining the economy? And, of course, is the change sufficient? In other words, the Fed is raising by a lot, but does it need to get to a certain level? Is the change sufficient to restrain the economy? The road to a soft landing, well, it begins with unclogging the traffic jam in the supply chain. It includes bringing workers back into the labor force to avoid a wage price spiral and the runoff of fiscal stimulus. Even then, not clear that 8 rate hikes built in this year and balance sheet reduction will be enough to corral inflation without a recession next year. And I think that's part, Joe, of the Fed's own lack of certainty.
Shepard Smith here. Thanks for watching CNBC on YouTube.